All right, happy new month, everyone. Today is the 1st of April, 2021. No April Fool's Day to anyone. So yesterday we posted that Thursday London session will be breaking down AQZ again. For those interested, I'm actually reading from here. We will look at how to trade IOF. For those of you in Simply Pips who are in love with IOF, we'll explain how AQZ simplifies this. We'll be looking at OBs. We'll be looking at how to trade IOF OBs with the AQZ feeds. And I mentioned also the reason why I push and love the AQZ. It has fixed rules, fewer movable parts on the charts, easily suited for individuals who know that and understand that trading is a probability. Right, so first thing I'll make you catch every price movement. So all price movements are not tradable by a single strategy. All price movements are not tradable by a single strategy. You have to leave some pips on the table when you're trading. You have to leave some pips on the table. And those moments when you leave some pips on the table, you aren't being lazy. You're just following your trade plan, and to help you conserve your account. There's something called over trading, right? So I also mentioned that you should use alerts. So the AQZ feeds, AQZ, the PC itself, this is the H4 PC, has the ability to alert you. You notice there are 3 dots up here on my H4 PC. You click on them, and the very first row there has add alert on H4 prophetic candle. You only need to click on it, and it gives you the ability to add an alert, right? If you are, depending on what type of package you have on TradingView, I'm on the topmost package, so I can have open-ended alerts, right? You said that once only or once per bar close. I prefer to have it whichever. The H4 comes at the PC comes at the close of the candle, right? So once you do that, you click on create, and you would have created your alert. Disregard the warning and say continue anyway. To the right-hand side of my screen, there's a column down there, and you have alerts here. If I click on that, you would see my running alerts at the top. Then you see my alert log underneath, alert log. So for today, April 1st, I've had just one alert, and that's for Euro NZD. If I click on Euro NZD, if I click on Euro NZD, somebody's all right. If I click on Euro NZD there, it's telling me that I got an alert for this H4 PC, right? This PC. I got an alert on this PC. So now I can basically draw my fib from beneath to the top. So here I have the breakout that necessitated the PC. Once I have that, I'm going to add a line to my chart. I'm going to put something towards the mean threshold. All right, the magnet is mean threshold. And now I'm going to set an alert on this horizontal ray now. Now I'm going to set an alert. So if you click on the horizontal ray, it brings out this. Here you have the alert, add alert to the horizontal ray. Price is array. So Euro NZD condition, Euro NZD price crossing the horizontal ray only once. And I'll create an alert. So this way, if I want to trade using Beat the Bank, I don't have to sit down in front of my screen monitoring this all of the time. I've now considered the first entry, which is the top of the block. I'm assuming I'm not going to be interested in that. So if price pulls back to this horizontal ray, I get an alert. And when I get that alert, I will now narrow down to my M15 to look for a Beat the Bank or an LSB or whatever I want to use for my entry, right? So you use alerts, and I use them a lot. It just saves me time. I think I had one on CAT CHF also. Yep, CAT CHF, right? So that was the breakout. That was the retest. The alert came up, and now we're TP1, TP2, TP3, and of course TP4 hits. Again, as a hint, when you want to use, when you want to set your TPs, I've had some people chatting me up that price missed their TP and dropped back. You'd notice that we have a light blue area that looks like the PE, the preferred entry, right, which we call our A1, A2, like the steps. Now you notice that you have a black line underneath, right, a black horizontal line underneath, and the price is actually here. You can see that 0.75262, right, up there. That should be your TP1, right? Don't try to pick the up one. Sometimes, of course, you get there, but notice there are times it just taps on your TP like it did now, and then pulls back. Another thing you need to know is that there's what is called spread, right? Your brokers will have spread. If your broker's spread is 3 pips on an average, and for a sell or for a buy, you should subtract 3 pips from that black line. So if price comes very, very close, it could still activate your TP. Those are not mandatory, just tips for those of us who get edgy when price misses our TP. So I think we have, so I just use this to show you that you could have your alerts when price breaks out, it comes. So notice where we started from, we said you can't catch everything, right? So when you sit in front of your chart for too long, you are attempting to catch everything, you'll soon see things that do not exist. You see mirages, and you'll be forced to take trades that might play out or might not. All right, so let's look at OBs for those of us simply pips that are fascinated with OB. And we'll now look at how AQZ simplifies the whole of this. I'll explain the concept of OBs by using an exchange. I'll explain the concept of OBs by using an exchange. So here I have my Binance on, and I'm going to bring out, notice here we'll have something called the order book, right? The order book, you don't see it on broker's feed, but I tell you that they have that. So if I click on this order book, boom, something comes up, right? So here you have the order book. You'd notice that you have, this is a chart of XT. Let's go to BTC. Let's go to BTC, a popular one. So we'll go to a chart of Bitcoin, right? So here we are. This is the price of Bitcoin. Somebody wants to sell Bitcoin at that price. The quantity of Bitcoin the person has is this, and this is the total amount. So notice, right? Now, note that this price is not just one person who wants to sell at that price. There may be a block of persons, maybe 50 people, 100 people, who knows, that want to sell at coincidentally almost the same price, and that's the quantity. So a block in essence, it's like if you have numbers from 1 to 100, you could actually block out 1 to 5 and call this a block. Then you have the quantity in terms of BTC that's to be sold or bought at this price, right? So remember, if you enter a trade for a buy, if you enter a trade for a buy, the only way you can get out of that trade is if you initiate a sell. And that's going to be when price hit my take profit, sell and give me my money, or when price hit my stop loss, sell and give me my change. So when you initiate a buy, the only way you can get out of the trade is if you initiate a sell, a counter trade, right? So for this bracket of 1 to 5, from amount to 1 to 100, you could call this a block of orders. So here you have those blocks. You see blocks of orders that they have for sell and for buys, right? So the exchange actually have this information. They have this data, right? They have this data. They know from their data at the back end, they could basically see where so many people have placed their stop loss and where so many people have placed their TP, or in this case, buy stop, stop loss, or sell stop, right? They have those data, and the data is divided into order blocks as you move from the peak to the bottom, right? Now, as traders, we basically don't know what price will do. Like Doug said in one of, I think he dropped a chart and said, if you have any mentor that speaks so confidently about what price will do, just get out of that group. You've met a scammer. You can't know what price will do exactly, right? But we could assume what price will do by looking at the past and see what price has done. So if there are sellers somewhere here, and I give this illustration, I'll give it again. If you have a range like this, so price has been in a range. Now, take your mind off being a trader and start thinking like a market maker, or in this case, an exchange, which is basically a market maker too, right? You have up here people who are willing to buy. So you have buy stops at the top of this range. Then you have people who have actually initiated a sell, but they have their stop loss here. Then down here, you have sell stops and people who have initiated a buy and then have their stop loss outside this range. The volume of cash you have here is $100 billion. And the volume of cash you have here is $60 billion. If you are a market maker, or you are somebody interested in cashing out money from the market, which of these would you attack? Obviously, you attack the 100 billion, right? So you would push price upwards, hit some stop loss, activate some buy stops, and then take price away from them so that the guys who have buy stops are in trouble. You come here, take out some stop loss also, and activate some of these sell side stops, and then you can now go for like 2 days, 3 days without coming back. You've taken part of this and you've taken part of this, right? So which is why we look at OBs, and I'll explain how AQZ fits in. So what do we have in OBs? We don't have this data. We don't have the data of where these things are. What we have is that we see series of bearish candles, and then we see massive pump up, giving us a bullish engulfing, which is an AQZ qualified candle. So it basically tells us that something, one form of manipulation happened around here. That's what it tells us, that a form of manipulation has occurred here, right? So if the big guys are willing to take price off this point, they may not want to release the people here easily. So when they come back, we would be anticipating a continuation, which is why we have the 4-hour PC, break, retest on our preferred entry, and then we'll buy. Now, it's not all of the time we have engulfers. There are times we have some other candlestick patterns, like we have an inside bar, right, which is actually the reverse side of an engulfing candle. When you have an inside bar, the bigger one is to the left, you basically have a range, right? So manipulation happened inside this place, and the next candle didn't really go beyond or below the large candle. The wise thing to do is to be patient to see what price will do. If price breaks above, you could assume that the run will be bullish. If price breaks below, you could assume that the run will be bearish. So you want to wait, which is why we have the inside bar as a qualifying candle. There are times you have something that looks like this, and we call it the tweezer. The tweezer is actually a doji, right? Push up, push down next time. On a higher time frame, it looks like a doji, right? So when you have that, you also want to box this out and wait to see if price is going to close above, meaning that from this bearish and bullish candle, the bulls won or the bears won, right? I'm trying to explain why those candlestick patterns are important. You need to understand at the back end what is causing all of this is these orders. These orders are the one causing everything, right? So you need to understand, when you understand that, you understand the simplicity in AQZ and the gift that AQZ could be when you try to apply it to order blocks, right? So last thing I'll explain here on order blocks, if you trade ICT or you used to trade ICT, you know when you have an order block like this, right, a bearish engulfing candle is actually what ICT calls an order block, bearish engulfing candle. This top part here could be a mitigation or a rejection, depending on where you're looking at it from, either from a bullish stance or a bearish stance, right? And in AQZ, we call this a violation. So when you have a bearish engulfing, you are saying that price will most likely continue to go down. So there was manipulation in this big candle. There was manipulation in the bigger candle, which is the engulfer. If price comes and violates the top of that engulfing, it means what caused the violation, what caused this manipulation has dissipated, and price might actually want to start going upward. So you change your bias to bullish, right? You understand this concept, then you understand why we look at AQZ the way we do. So basically, I've just explained OBs and the variations. We have variations in terms of an engulfing, an inside bar, a doji or a tweezer. They're all the same thing. Even a pin bar is a variation of a doji. So AQZ simplifies what you look out for and then goes ahead to point out some of those things for you. So in AQZ, if you are basically new into trading and you get easily lost trying to discover what those candlestick patterns are, we have an AQZ term called the prophetic candle. What it does is that it uses certain algorithm, which we wouldn't be explaining here, to spot out high probability candlestick patterns. Now, if you look at the chart, and for those of you who are new to AQZ and you have refused to follow the model, especially you've not watched the mechanics, you've not watched some of the videos in the 5 section, I can tell you for free, you get lost easily. Why? The AQZ qualified candles can be found virtually everywhere on your chart, right? So here we have an inside bar. Just beneath it, we also have an inside candlestick pattern. Here we have a bullish candlestick pattern, bullish engulfing, And here we have an inside bar. So how would you trade them? Here we have an inside bar. And here we have an inside bar. Then here we have an engulfing. So how would you trade them? So what AQZ, what the prophetic candle does is that it scans through the pair for you and finds out high probability setups. And you know the funny thing, if the setup fails, you take the opposite side. So it basically just simplifies things for you. So if you were like me some 3-4 years back, and then when you look at the charts, you actually feel like Alice in Wonderland, you are lost. It doesn't say anything to you. It tells you, it just breeds confusion in your mind. The H4 prophetic candle will basically eliminate that. So I'll clear up my screen right now and show you an example of what I mean. Right, so here we are on card CHF. And I think I dropped this signal as soon as it came up on, was it Monday or so? I dropped the signal in the group. So this is card CHF. Here you have what looks like a bearish engulfing. Why didn't the prophetic candle pick on this candlestick pattern? Why not this? Why not the bullish engulfing? Meanwhile, this bullish engulfing worked out, right? See, price came back into the bullish engulfing, boom, and pushed out. But if you don't have a fixed way of seeing the market, then you'll be lost. Because here you have a bullish engulfing telling you to buy. Here you have a bullish engulfing telling you to buy. Then here you have a bearish engulfing telling you to sell. Which of them would you obey? You'll be lost in the market. So what the H4 prophetic candle does is that it tells you, using some algorithm, which candlestick pattern out of the numerous you can find on your screen should be the reference point. And then from that reference point, you can begin to build your storyline. Every strategy is a story. And you need to understand the story to be able to tell it well. So on the 29th of March, precisely at about 11, this candle started and then closed. Once it closed, we got this PC, right? So we would draw our fib. Since it's a bullish arrow underneath, we will draw our fib from beneath to the top. So we start, usually I'll suggest if you look at the left-hand side of my screen, you see an icon that looks like a magnet, right? You just click on it, it snaps. It helps you just snap precisely from the bottom to the top of the wick. No error at all. No errors at all. So when this candlestick pattern formed, I am now no longer lost in the market. There are several bearish engulfing, inside bars, and blah, blah, blah. There's several of them, but now I'm no longer lost. I know precisely which one I want to focus on for today. Some people are saying no audio. Is that true? Certainly there should be audio.
Yes, audio.
Oh, thank you so much. All right, so let's move on. All right, so now I'm no longer lost. I now have a bias. Now notice it is a bias. It isn't a certainty, right? Now, this area I just drew is called the AQZ block. This area is called the AQZ block. Why is it called AQZ? I think Doug did a video on that. I've forgotten the story, but who cares? AQZ is AQZ so long it gives pips, right? So here you are. This block here is divided into 3. The block here is divided into 3. This is a bullish scenario. And because it is a bullish scenario, this top part is our buy zone. This lower part is our sell zone. And this light blue part here is our preferred entry. So that is our preferred entry for this, right? So it simply means if we are bullish, as in this case, we could look for buy opportunities anywhere within our buy zone. However, if price comes to the preferred entry, we would prefer that, like the name suggests. But most times, well, let me not say most times, many times price may not get to our preferred entry. And if we don't want to miss out, we could begin to frame out ways to take trades from our buy zone, right? So price broke out. We would be expecting price to come back down. ICT traders will have something here and call it price closing the fair value gap. But let's leave that. So you see price traded straight down to our preferred entry. We had mentioned earlier that you could have 3 entries here. You could have entry 1 at the top of the buy block. You could have entry 2 at the mean threshold, which is the middle. You could have your entry 3 at your preferred entry. If you did that, well, you had all your entries picked up, and then price took off, right? Price took off. Now, this sell zone is a buy. This is a buy scenario. So why do we have a sell zone in a buy scenario? We said that this is a buy. So why do we have a sell? If price comes back and closes beneath our preferred entry, we would switch our bias from a buy to a sell. And if you followed me closely, when I tried explaining what these blocks were, I told you that if you have buyers and sellers here, you have buy stop, and you have people who sold who also have their sell stop, that's in sell stop loss here. Then you have sell stops, and people who bought, we have their stop loss here. People who sold, we have their stop loss here. So you have buy stops and stop loss. We call them stops. They are basically stops. They are points of exit. And like I mentioned, if you're in a buy, you only exit when there is a sell. And when you're in a sell, you only exit when there is a buy. So they are all called stops. If you are a market maker and there is 100 billion here and 50 billion here, you might go against this 100 billion first, take up the buy stops, like you really want to buy, hit the stop loss of the people who are selling, then pull back. So some of these guys in buys will be distressed, come back down, take out the stop loss of the people who were buying, initiate some sell stops, and then you might decide to either continue or just go down and allow some guys to make some money. Now, because we don't know what price will do, price could make a U-turn. So when we have a zone that we have identified as our block, we know that manipulation was what caused this sell. And because they've manipulated to downside, we don't expect them to come back above the manipulation. If they come back above the manipulation, there's every likelihood that they just got new data, right? Notice new buyers and sellers are coming into the market. New buyers and sellers are coming in. There could be something happening beyond the knowledge of you and I. There could be a big whale buy up there that they need to make a U-turn and then go fish out that guy before they either come back down or just play around, frustrate a lot of people until they get out of their trades. And remember, money is not created or destroyed in this case. If your stop loss is hit, your dollars just went into somebody's account, right? So having that at the back of your mind, you understand why AQZ is suited for people who understand probability. So if you're looking for a strategy that will just tell you buy, sell without probabilities, you will most likely not get that kind of strategy in Forex, right? So if price comes back down and violates this region, we begin to think that there's a likelihood that they just got data that there's a bigger fish down there and they want to come back down. Now, we are not sure. I mean, we are not sure. We don't have that data. And so we can't trade intelligently as per with certainty, but we can trade intelligently. We can't trade with certainty, but we can trade intelligently. So that's this about that. Now, notice some persons could mark up this and then expect price to play. Well, watch what happened. Price violated, price closed above, and price pushed. Yeah, you could do that. And I see quite a number of us posting charts doing that. But I would rather suggest from my little experience that you focus on your PCs. If you want to fib anything, fib the things that are at the peak of your chart, not in the range. Focus on your PC because it works with certain algorithm to identify what the PC is. Right. So I've explained mean threshold. Now I want to quickly state is that you need to study DXY and if possible Euro GBP for USD and GBP related pairs, or you look at features. We've covered features in one of our the current index. Then we have the DXY. So if you've been following Papa Pips, he does a lot with the DXY, and that's because he loves trading gold, right? And anybody who trades these things should be used to looking at DXY. DXY is the dollar index, and it basically gives you an idea of what you should look out for. So if dollar is going to be bullish, you should be looking at selling XXX-USD. And for those of you who are new, I'm going to explain how you can do this easily. Let me go to NZD or something clean, and then we'll explain that. Why? I seem to have markup everywhere. Let's go to the other one, features. I think I have two DXYs here. All right, so I can take this out. So if you remember when we were much younger, there's this game we used to play, the seesaw, right? So you have something like this, and you have a right, you have something up, someone sits here, and someone sits here, and it swings down, up, something like that, right? So imagine that this is a right-pointed arrow, an arrow pointed to the right. If you have something heavy here, and you have something light here, it means this horizontal bar will swing down and the arrow will be pointing upwards, right? So if you have something heavy to the left, the arrow points upwards. If you have something heavy to the right, the arrow points downwards. So if you have GU, G is to the right. If USD is strong, you should be looking at selling GU. Or for in the case of gold, XU. If USD is strong, you should be looking at selling gold. And conversely, if USD is weak, you should be looking at buying gold, right? So when we look at the DXY, you could use just the same principle. Call up your H4 prophetic candle, right? And see your H4 prophetic candle just told you that you should be expecting bearishness of DXY. Again, you have this to this point. You should be expecting bearishness. So see, again, you see the breakout, you see the retest to preferred entry, and then price is dropping. When you know that there's going to be bearishness in DXY, you should be looking for reasons to want to buy gold, XAU, USD, using that example I just gave now. So if you go to gold, boom, gold is buying. Gold is buying, right? So you look at DXY to analyze that. Now, but when you get to GBP, let's do that. GBP USD, right? And Euro USD. Right? So if you notice, when you get to GBP and USD, I'll suggest you look at EG, Euro GBP. Right? Look at Euro GBP. What do you have? If you have a bearish PC in Euro GBP, it could be telling you that GBP is much more stronger than Euro, right? Or Euro is much more stronger than GBP, as the case may be, depending on whether it is bearish or bullish. You can now use that to sieve out which you want to go for. Remember this, you want to pair a weak against a strong, or a strong against a weak. You try not to do a weak against a weak or a strong against a strong, because you might get consolidation. Fortunately for us, with AQZ, we can trade consolidation, because if price is consolidating, we simply find a PC around here to sell and a PC around here to buy. If you love trading swings, then you want to do weak against strong or strong against weak. So if you know the pair that is stronger amongst the two, and DXY is also strong, you simply eliminate the strong one and pair the weak one against DXY, and you have an explosive pair to trade for that week. Right? So I think, again, if you watch the video, you might just get that clearly. So you look at DXY and EG for USD and GBP related pairs, or you simply look at the futures. Why do you do this? You reduce the risk of consolidation by looking at futures. I won't discuss EMA today. Right? So with AQZ, there is no fear, no second guessing, no fear, no second guessing. Just go to your charts and do exactly what the chart tells you to do. Of course, I was watching the video, the webinar by Doug yesterday. I think he did that webinar 2 weeks ago on what was that on now? Momentum shift, right? And he was saying most times when he picks an asset, he focuses on it mainly, rarely going into several assets. We also need to do that. And to be able to pick out an asset, you want to do either of two things. One, you want to do a top-down analysis, so you could be confident of your bias for that week. You could do a top-down analysis by starting from, let's say, the weekly, even the monthly if you could, but the weekly, the daily, I do the 12 hours, so you have it on my chart there. Or you decide to look at the futures, right? So there are about 28 pairs or even more. How would you narrow down on what you want to trade? You don't want to chase every single pair. So how would you narrow down on what you want to trade? It's either you do a top-down analysis over the weekend and you have an idea. So let's say you go to the weekly time frame, you're looking for AQZ candles to tell you to sell or to buy, or if price is violating something, then you have a bias that, okay, for this week, I think we're going to be bullish. Now you've been able to narrow down to 2 or 3 pairs, and you can now focus on them. The next thing you can do is you could check the currency futures. And I think we've done that before. We just run through it one more time. You pick on AUD, for instance. AUD on the 21st, on the 30th of March, we had a bearish AQZ. Right. Once we had a bearish AQZ on AUD, it simply tells you that we're anticipating AUD to be weak. We're basically anticipating AUD to be weak. Now you have a bias that AUD will be weak or should be weak most of the time in the week. Right? Then you go to JPY. For JPY, as at 31st or thereabout, 21st or so, it was still weak. So 2 weak currencies. You don't want to be trading AJ. You go to NZD. You also had around that same time possibility that it's going to be weak, right? So you have 3 weak currencies, all Asian pairs. You don't want to be mixing that up. You have weakness also in GBP. Weakness in Euro. strength in CAD. So if I go to AUD CAD, what do I see? Massive momentum to the downside. I'll be hitting my TP123 in few hours. Why? AUD is weak, CAD is strong. I simply put them together. Right? Breakout, retest. How far did it go? Let's see that. TP1, TP2, TP3, TP4. How did we arrive there? We just took an extra 1 hour on Sunday, on Saturday, or even on Monday, right? Most PCs will appear maybe Monday or Tuesday, right? So you're trying to narrow down on, I think it was Steven that was mentioning in one of our groups that psychology, you want to narrow down, be patient, wait for the cue, right? So that doesn't mean you couldn't have traded AJ. Let's look at AJ, AUD, JPY. Definitely amongst two strong or weak currencies, one will be stronger than the other and one will be weaker than the other, right? Sorry, I think I have a call coming in. One will be stronger than the other and one will be weaker than the other. So here, now, notice what you have in AJ. What do you have? Price came down. Price was basically not really moving. You don't have your TP1, blah, blah, blah. It's basically dancing, right? So notice AJ, both weak currencies. Price came down, price violated, price invalidated, price, you know. Duke, please let me know if you understand what I'm explaining. Are you getting anything from what I'm explaining?
Loud and clear.
Right. So what you want to do is just to reduce, the possibility of a range where you have invalidations, revalidations, invalidations. Would you be able to eliminate it completely? No. Would you be able to improve on your ability to screen out some of the pairs that may give that possibility? Yes. What you need to do, watch out for strength and weakness. You just want to pair strong ones against weak ones. All you need is 2 or 3 good trades in a week and you're done. So if you're trading FTMO, right? If you're trading FTMO, you're risking 0.5% of your account or 1% of your account per trade. You have 3 good trades with 1:3 risk reward ratio. 1, 2, 3, you are 9% up. 0.5%, 1 to 3 reward ratio, 1.5 per trade times 3. Where are you? 4.5%. Right? If you have a loser, net them off from this. It's as simple as that. Right? So I just showed you guys live how you could narrow down on your validations. Let's check. We've checked AJ. Let's check AN, AUD NZD. AUD NZD. All right. So look at AUD NZD. Came up 30th. It was bullish. And what do you notice? Bullish here. Sorry. Bullish. What did price do? Price came back, tapped TP, tapped entry 1, went to TP2, invalidated, go, and you look for something strong against something weak. So when you look for something strong against something weak, now you have the possibility of having explosive moves that will last 2 to 3 days. You just need something that will last 2 to 3 days and you are done, right? So let's check the Swiss franc, right? So as at 21st, no, as at when, which date was our which date were we using as our April 4th? When was Monday? All right, so around 29th, somewhere around here, you're still basically bearish of the Swiss franc, right? You're still basically bearish of the Swiss franc here. So you look for all of those and you are able to streamline your entry. So I'll give room for questions before we go around, quickly check our pairs for today and see if there's anything for us. If there's anything for us to trade, let's start down, down, down. We have GBP AUD. All right, so GBP AUD, I think it was GJ I was asking yesterday if we had. Okay, so here you can see the lines I have for my alerts, right? I have a line here for my alert, horizontal line. You can see the alert turn gray somewhere here because it's been triggered already. So, but let's look at GBP from our currency index. GBP (29th), we got a breakout telling us GBP was going to be weak, and we also had tendency that AUD is going to be weak. Technically, we should be looking at GBP, except want to scalp off the lower time frame, right? We shouldn't be looking at it, not because it won't work, but we might just get stuck in a consolidation, right? So we look at Euro NZD. So here we have this price broke above, price came beneath, invalidated our bias. So if you had gone in for a buy, once you see this invalidation, you simply cut the trade. So there's something that Doug was saying. I haven't been able to get myself to do that. Maybe I might try it again for another 2 weeks, and if my psychology doesn't fit it, just let it go. So I don't know how he does it, but he says something like this, that once you get an invalidation, you could cut the trade, or you wait for it to pull back a little, then you get out. So that way you've been able to save more pips. But I haven't been able to accept that in my mind, because when I see this invalidation, my mind just switches to sell, and I begin to feel like price will continue to sell. So I just take out my loss. Sometimes I come back and price actually pull back to my entry, and I would have saved some money, but I've not been able to do that. And if you've been trading for a while, you know that trade is not talking, right? Some things are easier said than when you come into practice. You discover that your whole system is telling you can't do that. All right, so let me see. It's like someone asked some question. How about to use IOF and AQZ FIB? I thought I explained that. I explained IOF and AQZ FIBs. All right, so let's go back to H4. So here you are on H4. Let's pick a pair that might explain that, like Euro JPY. Okay, so I'll use this to explain IOF and AQZ FIBs. So traditionally, IOF from H4, recently I started using, I prefer using IOF on daily time frame, because H4 has a lot of noise when you're looking at it from that concept. So I'm going to leave H4 and go to daily. All right, so again, if you're in a bullish trend, the bearish candles are your friend. If you're in a bullish trend, the bearish candles are your friend. right? So let's look at this. Let's start from this bottom. So this was the last bullish candle before this low. Once price closed above that bullish candle, you invariably had a break in market structure, right? You invariably had a break in market structure. You would now be looking for price to pull back to buy, right? I don't want to use the term source and everything, so wouldn't confuse people who are basically focused on AQZ, but you understand what I mean by price pulling back. Now, when price pulls back, this is the last bearish candle response for that up. So when price breaks this market structure, it means we are no longer bearish, but we are now bullish. And I said in a bullish trend, the bearish candles are your friends. In a bullish trend, the bearish candles are your friends. So here we have the bearish candle responsible for that high. So what do? I take my fib from the low to the top using AQZ fibs. See price traded into my buy zone. Anywhere within here, I could buy, right? Let me make this fib better to the eyes, right? So this is the last bearish candle response to that high. Price traded straight down into this point, and I'm buying, right? Again, this was the last bearish candle responsible for this high. Price never really came back. You had a series of consolidation where you would have had series of losses. Series of losses. But here you have the predominant low before this high, for which you've not had your gaps covered. Remember in IOF, we discussed gaps. So here, this was the last place where sellers came into before the buyers pushed up. The tip of this bearish candle has to be covered. So you see the way price came and covered the tip of that candle, it means the fair value gap has been covered. Some persons would prefer to use the tip of this candle, right? Again, whichever one you want to use, the fair value gap was covered. And once the fair value gap was covered, inside your AQZ buy zone, boom, you buy, right? This was the next bearish candle responsible for that high. You had some moments of consolidation that would be difficult to trade. Again, you wouldn't have known that this was going to be consolidations. So you would have had losing trades. It's easy to explain after everything has happened. When you're in the heat of the market, something else, right? But here you have a bearish candle response for that high, and you have the tip of that point, and price needs to cover this fair value gap, right? Price needs to cover it. See the way they came straight up to cover that tip of the fair value gap? Boom, inside your buy zone again, and then they rallied, right? They rallied after them, came back straight to that tip, covering this gap, and then you have the push up. All right, so here you have the last bearish candle responsible for this high. You wouldn't have gotten an entry there, unfortunately. But again, price, this has covered this fair value gap. This and this, the fair value gap is on this candle, the tip of that candle. And price came straight to it and then pushed up. This was the last bearish candle response for that high. Boom, this is the fair value gap inside here. Price never really got there. Price got into your buy zone and bought. So again, like I said, I don't want to, this is an AQZ related, I don't want to start discussing all of those stuff. But just know that in a buy trend, the bearish candles are your friend. And remember the very first thing here, you can't catch everything, right? But you need to have fixed rules. If price does not come to your buy zones, let it go. Somebody said for your time, okay, let's say the preferred entry in a bullish engulfing case is still a bit below and price closed below the violation line without closing below the preferred entry. How do I approach that? Wow, I can't imagine what you just asked. Tega, I can't imagine if you have an example on a particular pair, just point me to the pair so we can look at it. For AQZ, where is it best to place our stop loss advisably? Okay, for AQZ, well, if you've gone through the video on the mechanics of AQZ, we have what we call stop hunt zone, right? But aside the stop hunt zone, I'm going to explain stop hunt zone, but aside the stop hunt zone, you want to do an average of minimum 1:1 risk reward ratio. Better 1 risk is to greater than 1 reward, right? If you use the AQZ fibs, and you use the AQZ fibs with stop hunts, you have your preferred entry here for a bullish scenario, and this is your stop loss, stop hunt 1, stop hunt 2. Obviously, I don't expect you to have your stop loss this wide just because you want to hit take profit. Maybe I should make this. Let's make this a full AQZ fib. Let's make this a full AQZ fibs. All right, so that's the full AQZ fibs. So here you have your entry. Here you have your stop hunt 1, stop hunt 2, then TP1, TP2 like that. Right? So at worst case scenario, say you want to be lazy, your stop loss should be here, TP1 here. So if you are entering from this point, you have a 1:1 risk reward ratio. Right? And if price goes to TP2, now you have a better risk reward ratio. Now this is based on the fibs. Now, but to place your stop loss, you want to look at price. What is price saying? So let's look at this. We have a bearish AQZ fibs here. I will place this down here. If my entry is here, this is entry 1, and I'm having TP1 here, it's only natural for me to put my stop loss above the highest wick here, right? In this case, if I didn't harvest anything, or I harvested part of my profits, this would have gone straight up and taken me out in my stop loss. But notice that as it took me out in my stop loss, it came back following the rules. This is a violation and an violations or invalidation, as the case may be. Price came back straight to entry 1, then gave me TP1, TP2. I've recovered whatever I lost here. Whatever I lost in this trade has been recovered from TP1, TP2, right? But where do you place your stop loss? It should be above structure or below structure, as the case may be. Let's look for another example that will clearly explain this. GJ, yeah, we had GJ yesterday hitting SL for the sell. GJ, where are you? Right. We have GJ here hitting SL for the sell. So let's look at that. So take off this drawing. So here we have GJ. We would have fibbed from down to this point, right? So again, your stop loss would have been at this level. If you were selling blindly, your stop loss would have been here, and price came straight to your stop loss. Sorry for your loss. And there's nothing you can do. Now you are looking at possibilities of buying. Now you're looking for possibilities of buying. Then price came, if you entered for a buy again, your stop loss will be behind this candle. You took out your stop loss again. 2 stop loss hits. Then price went back and closed above. And now it didn't even give us any entry, and it went off. If you know how to trade your break and retest of your roadmap, this was a break of A1, retest of A1 straight to A2. You might have been able to recover something, but let's go back and look at how could we have treated this? And I remember asking that question yesterday, just one person answered. If we had gone back to our futures here, let's go back to our futures, and let's call up GBP. GBP as at 29th of March, or as at this date, 30th of March or thereabout, was basically bearish, right? Then JPY as at 31st of March was telling us that we should look for opportunities to buy. So you have GBP weak, JPY strong. So as at this date, it would have been supporting a sell on GJ, right? Unfortunately, price did something else and we lost that trade. So it does happen. You won't have, it won't be straightforward all of the time, but there you are. How do you place your stop loss? So let's pick that question again. You're going down for a sell. If you're going to sell, your entries are here. Your stop loss should be at the stop, right? Again, this would have taken out your stop loss. Then to have taken out your stop loss again for the buy, then it went and invalidated again for a sell, and there's nothing you could do about it. For a buy, rather, there's nothing you could have done about it, except you want to trade the ladder, which is break and retest, and not everybody does that. So for GJ, if you traded it based on the rules, you would have lost 3 times back to back, and it's part of the game. There's nothing we could do about that, right? So just to make it very clear, you see us posting a lot of good trades. We do have losers, and we take them like as traders and move on to the next one. It is what it is. So I'll check if there are 2 more questions, and we should begin to wrap up. DXY. Yeah, somebody said IOF could have done that GJ well. Yeah, if you go to the daily time frame, like I said, I think it was it yesterday? Yeah, I think it was yesterday. Papa Pips was explaining, if you joined the Zoom he had, he was explaining top-down analysis, right? So if you are morphing into AQZ from the traditional IOF and you find it difficult to let go of what you want to do, just know that from your order blocks, you can use your AQZ, and you want to do this from, let's say, daily time frame perspective, right? Daily time frame perspective, 4 hours perspective, 12 hours perspective. You will never get it right all of the time. You just need to get it right most of the time, and with good risk to reward ratio. So if you said IOF could have done it well, it's possible. It's possible. But even I lost the trade on GJ. And that's why it's fresh in my memory. When you lose trades, it lasts longer in your memory than the winners. All right, so I think we can call it a wrap. AUD, NZD, we've looked at that. Bitcoin, yes, let's look at Bitcoin briefly before we go. And we can use this to do the top-down analysis. If you go to the weekly time frame, what do you see? You see a bearish engulfing, and then it was violated. Once price closed above this level, we had a violation on Bitcoin. So what do? This is a bullish violation. It's a bullish violation. We simply fib, right? We simply fib upon the violation, see the retest to the PE, and boom, price is going, right? So Bitcoin has never gone above that the recent high. So how do you say where to go to, right? It's gone parabolic since March of 2020. So how would you say where price will go to? You can't say that. You can't look at your left now to predict. So we simply have this and assume that price will be coming to TP1. That was how we arrived at the $65,000 TP for Bitcoin. And I won't be surprised if it does that this week. I won't be surprised if it does that this week. That would be a 10% growth on any investment there. I won't be surprised if it does that this week. Right? See that perfect entry. Right? Push. So far, so good. From that point to this point is over 8,000 pips. Over 8,000 pips. All right, I think we've covered enough for one day. So it's been recorded. What I want you guys to do is too much of learning causes trouble, especially in trading. You begin to see things you are not supposed to see. One strategy tells you A, the other one tells you X. So the best way to do this is go to your charts, look for your H4 prophetic candle, and do what we call a back test. Do what we call a back test. You can pick a pair, like let's say, pick a pair like CAT-CHF, for instance. Pick a pair like CAT-CHF. Propose in your mind that you're going to do a back test of 1 year. Right? Propose in your mind that you're going to do a back test of 1 year. And you're going to have in your back test sheet, you would have your serial number, trade number 1. Was it, you have the date, so you could easily refer back to it if you want to. Then you have a loss or a win. And if it is a win, by what ratio? So let's say 1R, or is it 2R? So you have 1R here, you have 2R up there, you have 3R, and you have greater than 3R. So if it is 1R, you tick 1R. If you did 2R, you tick 2R. If you tick 3R, you tick 3R, right? So this is what you want to have. Then what do? You start from 1 year ago, come here, go back to 1 year ago, which will be sometime in April 2020. Uh-oh. What did I do? 2020, April. Let's say you go to April 2020. All right, so here you are. So what do? You have a bearish. You fib top to bottom, right? So what do you want to look out for? You had your breakout here. Price went, boom, TP1. You tag TP1, you've made TP1, right? Winner. Price closed above. Price closed above. And then price dropped down. If you are entering for a buy, price dropped down and you would have had a loss. So one losing trade. And now you have a new PC. So you draw again. You never got a retest on this one. You never got a retest and price melted all the way down. We eventually got a bullish one. So you draw your bullish. You see that? Price broke, came, TP1, TP2, TP3, TP4. So this will be, you will tick greater than 3R here now. Right? Greater than 3R, you tick it. You are done with that. So already, you come here, you have this bearish. Price came, Boom, you lost this one. Remember, for all your losses to just be 1R. Then price came and tapped your preferred entry and gave you what? TP1, TP2, TP3 greater than 3R. Just following this already, 4 prophetic candles already, you can see that you're already in a winning, you're already winning, right? You come from this point to this point. Again, you had your breakout here. You had your losing trade, 1 loss. You had your buy at this point, and this most likely gave you TP1. Let's see that both ways. Yep, it gave you TP1. So whatever you lost here, you made here. You lost 1R, you made 1R, right? So you do that for like 1 year. At the end of that, you are going to have a data for the pair you worked on. You have number of losses, and you also have number of wins. So this is not Doug, this is not Papa Pips or one bishop who doesn't know anything somewhere telling you what to do. You've done it yourself. You've seen that you would have losses, you have winners, right? How many times do you have 2R? How many times do you have R, 5% of 3R, and 25% of 1R? I lost 20% of the time. So what does this tell you? It tells you that if I want to trade CAD CHF, what should I do? I should focus on 2R. If I focus on 2R, most of my 1R will become losers. So that gives me 45% losses, and I now have this. So for every 1 trade I lose, for every 45 trade I lose, I'll have 45R. For every winning trade I lose, I'm going to have 70 by 2, that would be like 140. My account will be up over 95% or thereabout by just doing this. So let's get to work, guys. Ask intelligent questions in the group, and let's move on. So have a wonderful weekend starting from tomorrow. I don't know if NFP is going to hold tomorrow. Tomorrow is supposed to be Easter Friday. I can't remember if NFP holds on public holidays. We could basically check before we call it a wrap. Let's check Forex Factory. And of course,